Hi, everyone. You're watching episode 92 of Yield TV. Hey, everyone. Welcome back. It is Monday, March 29th, 2021. Today, we're going to do a really brief DeFi class. This is week 13. I want to start to do shorter micro lessons just because I think they're a little bit easier to watch and to quickly learn and to be able to act on that. If you do your own research and you decide this is a strategy you want to consider yourself. So this is today going to focus on how and why to farm like asset LPs. I find that a lot of newcomers especially don't realize all the different opportunities there are when you use assets that are equivalent in value or essentially represent the same token. So we're going to talk all about that here today. Before we do, I just want to quickly send out a tweet in case others are interested to watch. Here we go. Just 1 second. Here we go. Quick DeFi class on how to use like asset LPs to farm. All right, there we go. Cool. All right, so let me just start to walk you through this. It's really simple. We're going to focus on how and where, or I guess where to identify those opportunities. And then I'll show you how you can potentially act on those using Zapper to get into those LPs. And then in case there is any sort of yield farming component to it, meaning that I can earn additional rewards for providing that liquidity. So if I'm an LP, I could potentially stake the LP on the Zapper farm dashboard. I'll quickly walk you through that. All right, so let me just make sure, yep, all good to go. Let me share my screen. All right, here we go. So, per usual, if you've never tried Zapper, go to Zapper.fi. This is where you can connect to your Ethereum wallets and track your portfolio. But the place that I'm going to focus on today is on let's start actually on the pool tab. We'll use the farm tab to identify some additional opportunities. But we've talked previously about how to become an LP. So if you don't know how to become an LP, if you don't understand what a liquidity provider is, you want to go back to, I think it's DeFi Class week 11, how to become an LP. So you can watch that. This is a tab where you can ultimately start with any token you want, and you can add that token to all the different liquidity pools available here. Now there are about 1,200 here that are, oh, I'm sorry, not 1,200. There's almost 1,400 LPs with 10 per page here. But you can go here and start to search for different protocols or different tokens. Now, because I'm focused on like asset LPs or pools that have assets that are essentially the same value or they should be around the same value, I could start one of many different ways. I could start with a token like DAI, and then I can just start to look for LPs that involve DAI. So the 3 pooling curve is all stable coins. And so that could be an opportunity I could hop into. I'm going to be able to enjoy near zero impermanent loss. And so this is one example of a like asset LP that I could use. There's others here, though, across other protocols other than Curve. Curve is the most popular, and that's why I often just come here, type in Curve, and then look at all the different LPs. So there's the 3 pool here, which has almost $1 billion in liquidity. Liquidity doesn't mean that I can, I guess, trust that an LP is safe to use, but it does indicate to me that there's a lot of other folks trusting putting their liquidity there. It also offers me some greater guarantee that I'll be able to exit the LP at a later date when I'm done farming. So you can see here there's stablecoin pools. There's synthetic ether as an LP. So this one has ether and synthetic ether. So this is another opportunity if I want to remain exposed to the price of ether, but I want to earn market making rewards. Now, a whole other component to this is I could hop over then to the farm tab and I could look up the, oops, here we go. I could look up the Seth curve pool that we were just looking at here. It shows me that if I go into this pool and I stake, which is why there's a farming opportunity, I become an LP. That's one part of the opportunity. I can separately then come here and I can stake that and I can earn 19.23% APY. That's based off of the Curve governance token that I would be receiving. That's based off of the price of Curve today. So if the price goes down, then the estimated ROI will go down. If the price of Curve is going up and everything else is held equal here, then I'm earning a higher reward. So as you look through this, these are some of the factors that I consider with like asset LPs, but I have to be conscious of the fact that the liquidity could grow. So if it's more liquid, I could be potentially then earning a lower ROI, because if I'm being diluted by, let's say, whales that are putting more money into this, or just individuals putting more money into the pool, then my return shrinks. It matters how much of this total pie do I own. That is what's going to allow me to earn more of the Curve reward here. Now, if I go back to the pool tab, you can see I'm actually in one of these in this account. So I'm in the Y Curve pool, and that is one with USDC, Tether, DAI, and True USD. Now, if I'm focusing on these Curve pools, so if I go back to this, look up the Curve protocol, oops, click that. Zapper will then filter down to, I think we have near 40 opportunities listed on here. So these are all built on the Curve protocol. But if I'm not aware of what makes up these pools, if I'm newer to this, you can go to curve.fi and they have a list of each of those pools. And basically you can click into the pool and you can see what tokens make it up. But anyways, these pools are basically stable coins. They are pools made up of some derivative of Ether. There's staked Ether by Lido. That's another opportunity that's in here. So if I look up Steth, here we go. This one has 360 million in liquidity. Based on the trading volume in this LP, I'm earning those trading fees or those market making fees. But if I go back over then to the farm tab, and if I look up Steth here, by getting into this pool, if I stake the LP, I am then earning both the Curve governance token and the Lido LDO governance token. So now I'm earning 11%. So that's on top of the fact that I'm still exposed to the price of Ether. If I am in the Steth Curve pool, let's go back to this a sec. This pool is made up of about 50% staked Ether and 50% Ether. So whatever Steth I'm holding, that is Ether that is earning rewards because it's being used since it's staked and earning validator rewards, which all I would need to know then is if I go to Lido, I think it's lido.fi, they show that you're earning about 7.9% for any Steth that you're holding. So 7.9% on staked Ether plus the 11% in Curve and Lido governance token rewards. So this is why the TLDR of this is that, like asset pools, mean that I have a reduced risk of impermanent loss, because these tokens, they go up and down together in price. They're essentially equivalent, and so I don't have to worry about the impermanent loss. I'm still exposed to the underlying tokens here, which in this case, if I'm long Ether, I get to remain long Ether, or I get to remain long Steth, or I get to sit in stable coins, or I get to sit in, let's say, wrapped. Let's go to Curve here a second, look up a wrapped Bitcoin pool. There we go. There's Ren Bitcoin. If I'm holding that, I think that's the Hubby version of their tokenized Bitcoin. This is the synthetic Bitcoin, which is from Synthetics. So these are all different ways that I can remain exposed to these tokens I'm long on. I can earn market making fees, and I can earn the yield farming rewards. And there's so many in here to check out. I mean, ALUSD refers to Alchemex. That's a newer one. They have about 99% rewards right now issued through a few different yield farming initiatives they have. But I don't have to worry about, in this case, I mean, barring some black swan event, I don't have to worry about ALUSD falling in price, because that's a stable coin. So if I want to hold those stable coins, I continue to benefit from that stability while putting my money to work, earning market making fees and potentially yield farming rewards. So I would say the key takeaway here then is, if you go to Zapper.fi/invest, I would check out Curve. Just look up the Curve protocol here. Another thing one could do is, you could look up DAI, you could look up USDC. You could look up, let's see if I look up USDC and Tether. So I'm not going to be able to filter. That's right. I can't filter by opportunities that are only USDC and Tether. It combines all of those search results. But yeah, like you can see, here's SUSD. That's another stable coin pool that is in Curve that I could be earning with. So lots to consider here. But the key is remaining exposed to multiple tokens that are all essentially equivalent in value. And then if I do find that opportunity here in the pool tab, all I have to do to invest in that is, go here. I can choose from any token I've got in my wallet. I don't even have to start with the underlying tokens here. So DAI, USDC, and Tether are what make up this 3-pool Curve pool. So I could go here and I could put in Ether. I could, let's say, choose DAI and put in a 100 DAI. And I guess once we approve spending my DAI, this Zap will actually swap my initial DAI for the underlying USDC and Tether that help to make up the liquidity provision. And then the last bit of this is just hopping over the farm tab. I would look up 3-pool. Actually, let's look up Curve. There we go. So this was the one that I was just honing in on. And I could go here, and I will then have that. I'll have the option here. I'll see a green button that says stake. So this is where I go after I've already become the LP. And you can use this button too, and it'll reveal to you, hey, like you're holding the Y Curve LP. You could stake that. Once I approve that, then there's a stake option, and that's it. And then I start to earn the Curve governance token. So if you have any questions, please reach out through Twitter, or you can hop into our Zapper Discord. The few risks to call out here are anytime I'm exposed to stable coins or to a pegged asset like tokenized Bitcoin, just be aware that carries some risk. They can end up trading above the peg or below the peg, and that can cause all sorts of systemic issues. And then what else is there? Just in terms of the few opportunities I called out there, wrapped Bitcoin, of course, has some centralized risk. There's a custodian behind wrapped Bitcoin, even though it is the most liquid tokenized Bitcoin. And I would argue it's probably one of the most battle tested, but it's not trustless and decentralized in the way that something like TBTC is, trustless Bitcoin by the Keep team. So there's that. I think that's about it. There is still some risk of some impermanent loss. It's just that it's very small when you're in a pool of all stable coins, or if you're in a pool of different tokenized Bitcoin, or if you're in a pool of, let's say, staked Ether and Ether. I'm probably not going to walk away from that LP with the same balance, just because the small fluctuation in prices is going to shift the balance of the underlying assets in my LP. So I might walk away with, if I went in with 1 Ether and 1 staked Ether, if that was the ratio, I might walk away with 1.01 Ether and 0.99 staked Ether. So other than that, let me know if y'all have any questions. I don't see any here. Appreciate you tuning in for a nice short DeFi class on how and why to farm like asset LPs. Don't forget to subscribe at tv.zapper.fi. And, as always, please hop into our Zapper Discord if you have questions about Zapper and how to use it, how to get started in DeFi. We'd love to help. So that's it, everyone. Have a great day, and thanks for tuning in. Bye.